In the market, one thing is for sure that you can never predict what Donald Trump is going to do next. India has been put on 26% tariffs on US exports. US is in a disadvantaged position. Does this lead to higher inflation? Does this lead to higher recession? Hello everyone and welcome to this week's YouTube video. In the market, one thing is for sure that you can never predict what Donald Trump is going to do next. And this sentiment has never been more true than this week when Donald Trump has come and announced these sweeping tariffs across the board, across geographies. So while we've seen Donald Trump's tariff in the first trade war in 2018, this time it seems to be much more aggressive. India has been put on 26% tariffs on US exports. Similarly, China at 34%, Vietnam at 46%, and even the European Union at 20%. The idea behind these tariffs is that they want to raise $700 billion through these tariffs, which might account to 2.4% of US GDP. But experts have varied opinions. This will really disrupt global trade, disrupt the US economy, and maybe not have big positive that Donald Trump aims to have. So in this video, we'll be analyzing why have these tariffs come, what will be its implication on the global market first of all, what will be the implication on the American economy, what will be the implication on India, which sectors will be hit, and what do we do next. So stay tuned, this is going to be an interesting video. Let's start with why. Why has Donald Trump come and put these sweeping tariffs? To understand the why, we have to actually look back at America's role in the global trade. Since the Second World War, America has been the key leader across the world. American currency has in fact been the currency that has been the currency of the world in a sense. America has been the leader of global peace. They have sort of brokered various peace alliances. They have the military leadership. And through that, a lot has changed for the American economy. Also, American economy has a ballooning debt right now. And the interest payments from the debt are ballooning higher than their GDP right now. They have also lost a lot of manufacturing jobs and their middle class has been hollowed out during this time. So while the rich people in America have become richer, the middle class has hollowed out. They don't have manufacturing jobs to support the middle class. And Donald Trump seems to think that if he puts tariffs on global trade, if he makes sure that manufacturing happens in America, he would create more sort of jobs. He would sort of boost the American economy. He thinks that with America's role as a global leader, various trade partners across the world have been taking advantage of the US trade policies, and US seems to have, inferior trade policies, being the larger party with other countries. In White House's announcement, they came and said that, they actually cited a few things like India put 70% tariffs on passenger vehicles. Networking equipment from India has a 10 to 20% duty. Similarly, 50% duty is being put on Apple imports from India. Citing all these examples, the White House and Donald Trump has justified that, they think that they are getting unfair trade policies, and it's very strange the tariff rates that they have pushed. So you guys might have seen our videos or you might have read our blogs. We did a lot of analysis, along with us, various other analysts and macroeconomists did analysis to understand what would be the tariff rate or what would be the differential, which America would tax on India as reciprocal tariffs. And the numbers were nowhere near the tariff that have been put. We thought that we would see a 7% differential in terms of aggregate tariffs, or if they do product specific, then the impact could be much lesser. Many experts came and told you this, but in fact, this very, very high number calculated by the US seems to be, a strange number where what they have done is they've taken the trade deficit in terms of goods, not even services. So services like IT services are even not considered in this. They're looking at goods and manufacturing. They're comparing the tariff rates for those good imports and they're dividing it with the exports that yearly US takes from those countries, and they have come up with this very, very high rates. And then they have divided that by half and they're saying that we're going to discounted reciprocal tariff rates. It seems extremely strange, and they are justifying it with this notion that this will bring back manufacturing into the US. It would help them strengthen their financial situation. But will this have that impact, or will there be unintended impact that maybe these guys are not accounting for. So let's try to understand what could be the implication of these tariffs if they are put by Donald Trump. So whenever a country increases tariffs or sort of makes imports into the country difficult, it will have an impact on those industries which are dependent on those imports, right? So for example, if you look at electronics, so US is a major importer of electronics. They have over $500 billion in electronic imports that they do annually. And if that is suppressed, then obviously the cost of those imports will go up, because now those countries also put reciprocal tariffs on the US, right? So which would impact industries in the US, like the electronic industry, the automobile industry, the textile industry. It would lead to a higher inflation, right? So while the Fed has been struggling to bring down inflation, which got really high after COVID, this would cause an uptick in that inflation. During the last Trump term, we saw that this sort of a tariff policy led to a small uptick in inflation. And again, when such policies are announced, we would see inflation across the US see some uptick as well. With this in mind, I think people are also speculating that, we've not heard Jerome Powell or from the US Fed come and talk about it yet. So what would Jerome Powell do? Will he announce some measures to contain this? I think that is also something that would be very interesting, because the rate cuts that the Fed is thinking could in fact be accelerated because of this. The second big thing that happens in the US economy is that the burden on the consumer increases. The US consumer will bear the brunt of these rising prices. The electricity which is being imported from Canada will get expensive. The textiles, electronics which they are importing from various countries will get expensive. Various tech related goods, domestic appliances, everything would see some uptick in terms of prices. Right now, more than 80% of mobile phones and 90% of consumer electronics in the US are imported. So you can assume that there would be a rise in prices across those boards, and the retail client or the consumer in the US will bear the brunt of those heightened prices. Again, on US companies, if you actually look at it, there would be a lot of margin pressure. So corporate margins will be under pressure, because various corporates are dependent on foreign partners and they import their raw materials from all over the world. So as these tariffs cause stress there, you would see corporate margins be under pressure. And I think we're seeing that impact happen in the US market already. Right? We saw a 4.85% correction after Donald Trump's announcement, which was one of the biggest correction in the Dow that you might have seen in recent history. And this is because, number one, people are speculating that does this lead to higher inflation? Does this lead to higher recession? And does this actually lead to lower corporate profits, lower corporate margins? And those type of speculations are causing a stress already in the US markets. Now, before we go and talk about India, let's talk about the impact on the global markets with this. So unlike trade war 1.0, which was just a trade war between US and China, this seems to be a broader trade war, right? This is US against the world, right? US is in a disadvantaged position for sure, like we discussed, because of their lowering manufacturing, their higher debt, and they do have a strong adversary in China, which has come up to be a major player. And with this trade war coming in, possibly China would take advantage and China would become a better trading partner for rest of the countries across the board. Trade war 2.0 right now looks like Donald Trump against the world. And let's try to understand what is the impact that this would have on the global markets. Number one, like we discussed, retaliatory tariffs, right? So Donald Trump has come and announced these tariffs. Now, rest of the world is going to come and say that, we also want retaliate and put similar tariffs on the US, which leads to, even worse trade terms for the US, and sort of really impacts the global trading order. Right now, China in fact has come and already announced retaliation. European Union is speculating that. We've seen China, Japan, it's also think of a trade pact and sort of be ready to retaliate against the US. I think India would also think about the trade relations, and I think the world order would sort of adjust because of these announcements. I think there would be a lot of monetary response also. I think various central banks, for example, example, China has come out and cut their rates and they have devalued their currencies because they want to be attractive to trade. Similarly, other countries, including India, would cut down their rates and try to become much more attractive as trade partners across the world and find better trade relations. So we'll see a lot of adjustment in the monetary policies also. Another big thing that would happen is new trade alliances and new trade pacts. We've already seen announcements of something going on between China, Japan, and South Korea. We've seen European Union sort of unite and sort of form these policies. I think India would try to find these agreements with, let's say, European Union, UK, China, etc. So new trade alliances and pacts will see the world order again change in light of these tariffs. What we would also see is supply chain restructuring. We've seen more than 60% of the companies that operate out in the China looking at other partners. And when that supply chain restructuring happens, India being a country that right now is not the biggest manufacturer in the world, right now, we're not the biggest manufacturing player in the world. We could in fact see some manufacturing come back into India as the global supply chain restructure. So this in fact would be a positive opportunity for Indian companies, for Indian policymakers to actually get some manufacturing business into the country. Now, what is for sure is that this changing policies, this changing geopolitical order will have far-reaching impact as the US president has come and announced this. And this seems to be America's policies in the next 3 to 5 years. We would see big changes in the geopolitical order, big changes in how the world trade happens. Now, let's try to assess the impact on India. We are a services exporter of the world, right? So because, we don't have a huge part to play in the goods manufacturing, we don't see a big impact happening directly into India yet. We were very skeptical about pharma, right? Because India does export a lot of pharmaceutical goods, but there's a silver lining that pharma is exempt from these tariffs, right? So pharma exports will not be impacted due to this tariff. Donald Trump has said that pharma is exempt from these reciprocal tariffs. So that's a big positive for India pharma companies. Secondly, if you look at electronic manufacturing is an emerging industry in India, right? We're not the biggest electronic manufacturers of the world. If you look at Taiwan or China or South Korea, those are the biggest, parties that manufacture electronics. Now, as the tariffs are now higher in China and higher in Vietnam, what that means is that India could in fact get some more manufacturing business for EMS and semiconductors, and that could be a little bit positive for the Indian economy as well. Now, like I said, IT services are exempt from these policies, so IT hasn't been hit directly, but it will have an indirect impact. IT sort of provides services to the global markets, to the global banks, to the global manufacturing units, to different large organizations in the global markets. Now, with the recessionary fear in the US, that impacts those markets also. So, our demand which comes from the global market for the Indian IT would get impacted, and you would see indirect impact of these policies on the IT industry. Therefore, you're seeing some meltdown happening in the IT stocks after these announcements as well. Various companies which are actually based out in the domestic markets and which actually cater to domestic needs, for example, infrastructure, power, healthcare, hospitality, even defense, might be least impacted. They are not that much impacted by these policies until unless a global recession comes and impacts the world order in a big way, which is still a little bit speculative. I think the consumption story is going to be the strong one in India, but we could have second order effects on luxury and high-end consumption. What we have seen over the past few years is that luxury and high-end consumption, in fact, has been the leader in the consumer sector. But with these policies coming into place, impacting the global order, we could see some impact in that zone, whereas, the regular, the durables, the consumer durables, the non-cyclical consumer spending continues to be the same. In terms of other industries, we've seen some big impact happen in some smaller sectors. For example, fisheries and some aquaculture linked companies have seen some hit happen because of these policies. But we think that that is going to normalize. And, the volatility, if you actually talk about the markets in India, we are going to see a lot of changes happen in the world over the next 2-3 years. Now talking about the market as a whole, there are going to be a lot of changes in the world order, right, which will lead to volatility in the Indian market. Today, US has announced tariffs. Tomorrow, let's say China comes and announces something else, or, Europe does something or Canada does something, and then this negotiation, renegotiations, and changes in the policy order that leads to volatility in the Indian market. So, what do we do as investors into the India market? If you're looking at companies right now, I think India has come down from a big slump. Our valuations are attractive in a sense, apart from some small and mid caps, which might be slightly highly valued. I think the valuations are attractive. We're seeing an uptick in sentiment in India. I think it's a good opportunity to actually go and accumulate high quality, high earning companies, right? The investment sentiment toward India is getting slightly stronger. I think the big event has come and gone. I think right now having a focus on quality, having a focus on looking at opportunities in terms of earning momentum, in terms of price momentum as well, could be a great opportunity to build a profitable and alpha generating portfolio over the next few years as well. Now moving on from the markets to India's strategic opportunity. As India sees these changes in the world order, India has opportunities to form various other trade pacts like we discussed, talking to the EU or UK and other major economies to find trade pacts that makes trade easier with this protectionism coming from the US. It's also a lot of speculation from the US that India puts indirect taxes on them, which means that ease of doing business is difficult in India, compliances are difficult in India. So I think India has an opportunity to solve those, maybe restructure the taxation regime, restructure the compliance regime, and get better ease of doing business and make that differentiation for itself in this time. I think the PLI and the infrastructure investment that India has been doing could be a big boost that boosts our economy in these uncertain times. India could also, really bolster itself as a manufacturing hub in the new age segment through these PLI schemes. I think India's positioning right now as a neutral geopolitical power also comes to our advantage as we will navigate and find newer trade partners across the world. So what happens next in the market? There's a lot that's going to happen in the market. You will see, sharp reactions initially in the market, which has already happened in the US. We're seeing some of it happen in India as well. You will see retaliatory announcements coming from Europe or China, from India, from different places, and that will have another set of impact on the markets. The big thing will be that there will be announcement coming from the monetary policies. The US Fed will announce, its interpretation of what is happening. India RBI meet will maybe cut down the rates, and we'll see things happen across China and different places as well. There will be shift in FII flows also as US becomes much more protectionist, as the US dollar depreciates. Maybe emerging markets will in fact become attractive, and you could see fund flow coming into countries like India, and we're already seeing FIIs actually start buying into India recently. And with our strong demographic dividend, our strong growth rate, an emerging country like India could in fact be a standout country in this global trade order, shining not just because of our strong consumption and our strong markets, but also because of our emerging manufacturing. And we could see even fund flows coming in and India becoming a more attractive place to invest. So what we learned from this video is that in this world order, uncertainty is the new constant. The world was recovering from the post-pandemic shocks and distortions, and now a full-blown trade war has come, and it might be the last thing that the global economy needs. But yes, this has happened, and we will see the world order change and a lot of things change in the global order, which will help us navigate it. I think for India and for our portfolios, this is a moment of resilience. We will have to stick to our strengths and maybe also find opportunities which are attractive to show more resilient in these uncertain times. I think navigating these risks with agility and doubling down on our competitive strengths will define who comes out stronger in this scenario.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.